Good afternoon. Deborah Pratt Johnson Burns here, the founder of Literacy to Legacy Mentors, Reframing Your Financial Future. We are a financial education and mentoring company. Today, we're going to be talking about establishing credit for the first time and obtaining your first ever credit card. So how does one go about in your early 20s securing a credit card for personal use? So the first thing to consider is there are many banks and lien and loan companies that actually offer student credit cards. They are specific credit cards geared towards students with a number of benefits and factors. So for instance, the first and most important one is, are you eligible for a credit card? What that means is, do you have a regularly paying job, a salary job, that you could actually pay back your credit cards with? Or do you have other income, perhaps, whether it be from a portfolio, dividends, or a side hustle that you may be hosting on Etsy, let's say, or anywhere else for that matter? Are you doing Instacart or Uber Eats and it's a regularly paying job? Do you have work study for that matter at college? And could you pay off this credit card using those funds? So the bottom line is, do you have funds to repay your debts that are regularly occurring? And if the answer is yes, then you will qualify for a credit card. If the answer is no, and you have periodic or spotty income, and you're not able to secure a regular paying job and or side hustle, then you may be qualified for a secured card. What that means is two things. You can either put down a certain amount that you actually would be drawing against when you make a purchase. So for instance, there are some small credit cards that you can put down $500, $250, or even $1,000 as a secured amount deposit, if you will. Or you can also decide that you would ask either a parent or guardian if they would co-sign your credit card. That would mean that if you defaulted on payment and you never paid it on time, for instance, the parent would be responsible, or the guardian, for paying that particular credit card, whether it be a monthly payment or payment in full. So let's start with the secured credit card, because most students do not have regularly paying jobs, whether they be full-time students or not. They may be working in the summer, and that may be some regular income, but credit cards prefer that you have a regularly paying job, whether you're in college or not, on a, generate a regular monthly and weekly salary. So secured credit cards, let's say you have saved $1,000. You would get in touch with the credit card company and you would look at all the terms online. So for instance, some credit card companies offer very attractive terms. For instance, no annual fee, very low APR, meaning the interest rate. They may have a credit match, for instance. So if you put 1,000 in, they may put 1,000 in, depending on how you are able to repay the debt. And these terms are variable. So for instance, these terms may be introductory terms, and they may go away after 6 months to a year. So you need to really evaluate where are you at on the spectrum in terms of earning, in terms of ability to repay the loan and the debt, and the ability, the card, of course, and the ability to do so on a regular basis. The most important factor in repaying a credit card is payments on time and also never missing a payment. So if you feel as a young adult that you can meet that criteria, bravo, I love it. So then you become more eligible the more you're able to demonstrate repayment terms. The other thing is when you do get that secured credit card and you look at all the different terms and offers that are available, of which there are literally dozens and dozens of offers from credit card companies. And these are the standard credit card companies from major banks in the United States. So I'm sure you know what they are. Your parents may be banking at some of those banks, or you, in fact, may have your own checking account or savings account. That also helps, by the way, in determining your credit worthiness. Once you do actually get the secured card or a regular credit card, and you have demonstrated the ability to pay it back, you will begin to determine what your credit worthiness is by a number, and it's called a FICO score, FICO, and that stands for the Fair Isaac Corporation. They are the first company to actually provide a numerical gauge, if you will, on your ability to pay back your credit cards. And you earn this FICO score. I believe it starts in the threes and goes all the way up to 850. So a perfect credit score is 740, and that enables buyers such as yourself, or credit card holders, if you will, the ability to, on a sliding scale, pay for larger purchases. So if you have a credit score, let's say in the mid 600s, when you first start out, and then let's say in 6 months to a year, you've demonstrated excellent credit worthiness and your score goes up to the low sevens, then you will be able to not only afford more on the card, of course, like you may also be able to get your first loan. You may be able to get your first apartment. And for that matter, you may be more eligible and more attractive, if you will, to a potential date, because a lot of the dating services actually require you to provide a FICO score, interestingly enough. And it just shows and demonstrates that you're a responsible young adult and that you are living your life in a meaningful and responsible way. So a lot of people who date people want to know that, and that you're not a credit risk, so to speak. So the good news is, as your FICO score increases, your loan terms, if you will, so the credit available to you, becomes a larger number. Okay, so in other words, if you migrate from a secured credit card to a regular credit card after a year, and you are able to demonstrate that you are credit worthy, they may actually give you a higher credit limit. So the first secured card, you set the limit. If you get a regular credit card, they set the limit. So for instance, they may approve you for a $1,000 credit limit, $1,500 credit limit, and that may actually increase over time because you've demonstrated credit worthiness. You've paid your bills on time and you've never missed a payment. So those are very, very important factors. The other important factors as well are never to actually charge anything on a credit card that is actually more than 30% of your available credit. So in very simple terms, if you have a $500 credit limit, 30% of that is $150. So they, meaning the credit card companies and those that are extending the credit to you, would prefer to see that you not charge anything on that credit card over $150 out of a $500 credit line. Now, that seems unfair and sort of a low number. But again, remember, you are working to establish credit worthiness, and they do not want to take the risk of extending credit to you over 30%, knowing that you may or may not be able to pay it back, even if you do have a regular salary job. That's a criteria, but your payment credit worthiness is really the most important. So those are interesting factors. And the good news is, as you meet those factors over time, the credit card issuing company determines that you are actually more creditworthy, and they will give you more benefits, more bennies, so to speak, as time progresses, so that at some point you will be eligible not only to take out a home mortgage loan or home equity loan, but also perhaps a personal loan for other purposes. For instance, most student loans are federally funded, and they are subsidized, which means they do not incur interest until the repayment term is started. And others are unsubsidized, which means they are actually incurring interest while you're in school, and you'll have to pay that interest plus the principal back. The reason I'm telling you this is that students, and their parents for that matter, will actually consider refinancing those college student loans with a bank loan, because a lot of the time, the bank loan fees, as well as the bank loan percentage of interest, is lower than that of the federal the federal loan amount in interest. So let's recap this quickly so that you really are very clear about how this works. First and foremost, let's make sure you have income to pay back your debt, preferably recurring revenue, as they call it, and however many income streams you can generate, whether it's from a primary job, from a career perhaps, from a side hustle, if you will, if you make things, or if you're a caterer, or if you're a bartender, or things along those lines. Wherever your income happens to come from, let's make sure it is a consistent revenue stream. So that's really the most important thing, because then it demonstrates your ability to pay your credit card back. Secondly, are you able to get a secured credit card, which means someone co-signs or you put down a deposit, or a regular credit card for a student? So those factors will be determined depending on your personal set of circumstances. If you get a secured card, you can only spend up to the limit that you have secured. And the preference from credit card companies is that you only secure only up to 30% of that deposit amount. That is the case too with regular credit cards. Only spend or charge, if you will, up to 30% of the credit limit or line. And then lastly, the most important factors of your credit to build credit worthiness are income, paying on time, never missing a payment, and only using 30% of your credit. So these are the top line factors in securing a credit card for the first time and becoming a good credit card contender, if you will. Because there are people outside of getting your first credit cards that don't meet these criteria, and they're in their early 30s, 40s, and 50s. So, starting early is really, really some of the most important things you can do. That's a fact. And if you can start in your early 20s and establish really fine credit by the time you're 25 or 30, you may actually be on the fast track to not only get all of these benefits from the credit card companies that they offer. I mean, some in fact even match your secured amount and are able to offer you benefits like all sorts of credit profits. You can actually get cash back, 1 to 3%. They will give you special deals on certain concerts and Disney parks and things like that. So believe me, the more you can establish your credit worthiness, the more benefits that you will reap as a credit card holder. So hopefully this is all extremely helpful. It's important that you really evaluate all of these cards online and you determine what obviously works best for you. If it's helpful, review it with me. And I do complimentary consultations for half an hour. You can sign up on my website and figure out at the bottom of my website landing page what your challenges are and what your concerns are, what your questions are. And you can look to me as a guide, as a mentor. You could also ask your parents, your guardians, your aunts, your uncles, anyone who's actually established credit and how they did it. And most of us will give you similar answers because this is a process, and the earlier you start, the better. The also most important thing to remember is that credit cards are not to be used to live on. So that's critically important. They are not to be used to abuse. So if you're finding you're using credit cards because you don't have the cash and you're using them to live on or buy things you want and live a little bit more outside of your means, that's a problem because it will come back to bite you big time. You'll find yourself amassing credit card debt that you can't pay back. And if you decide at some point that you're going to let this run wild, then what happens is the credit card percentages of interest will go up. and your credit line of available credit will go down, and you'll be paying credit cards till you're blue in the face. And that is something you absolutely want to avoid, because it takes away the quality of your life. So being a credit card holder is a responsibility, and it is a serious one. So make sure you follow those criteria and meet those criteria very seriously. And you will have the freedom, the financial freedom, to actually use these credit cards for things that you may want that are bigger purchases at some point. You may want to buy a house, you may want to rent an apartment, you actually may want to put down a deposit on a second home, or a major vacation, or a big gift for your parents for their 50th wedding anniversary, whatever. There are a number of different things that you may want to use them for. But remember, again, 30% utilization only. It's considered a thing called debt to income. So if you can show that you're only using 30% of your credit available, you will be put in a very, very small percentage of people who are credit worthy. This is not something that's easy to attain, and it's not something that is easy to be consistently attained. So keep that in mind too. Even people who have very high paying jobs, who are very responsible with their money and with their credit lines, get into trouble because they go above the 30%, and their credit worthiness is erased accordingly, precipitously, if they are going over 50%, that is, of their credit line availability. So that is the story of how to go about getting a credit card. I do hope that you will do so responsibly, and that you will use this financial freedom education opportunity to educate yourself about all of the options, all of the different banks and credit card offers, that you will either look to me as a mentor and a guide to help you through this process, or your parents or your guardians or your aunts and uncles or good friends of the family, and that you will do so with a responsible attitude. And I wish you all the best, and do check out my website, literacytolegacymentors.net. I also host a financial freedom education series every other Wednesday evening at 5:30 to 6, a power half hour of interviews and presentations about personal finance of a myriad of topics. You can subscribe to my YouTube channel, where the Literacy to Legacy Mentors education events are. And you can also go on my website for a wonderful array of articles and events and topics that are of interest to most people who are looking to get personal finance education and mentoring. And I do look forward to seeing you and or hearing from you in the near future. And I thank you so very much for attending this evening. Thank you. Good luck.